Good morning. 2020 will not just be the year of COVID-19 pandemic, but also a year in which the line between our digital and physical lives blurred like never before. Despite the pandemic restricting major events across the world, it has not stopped us here at Bank EBC Group from hosting the 4th Middle East and Africa FinTech Forum. It is 100% digital this year. This morning, I'm so excited to be joined by over 2,000 people from around the world for the region's most anticipated FinTech Forum. Over the next 2 days, we will explore the bank of the future and what is banking beyond digital. Ladies and gentlemen, COVID has caused the world to reset. New habits formed in response to the pandemic will continue, and the no-touch economy is here. The pandemic has accelerated changes in the way we live and work. Half a decade of change in just a few months. What we have imagined for 2025 is already a reality in 2020. These are extraordinary times that require extraordinary measures. We have witnessed massive support from governments and regulators at a scale never seen before. The challenges that we'll face now will create opportunities for the no-touch economy.
In a world that we thought we knew so well, we came face to face with an unprecedented event that caught us all off guard.
Coronavirus cases keep wearing face exceeded 6 million.
The world as we knew came to a halt, a sudden sense of fear, caution, and confusion as humanity went into a complete and utter survival mode. It was crystal clear that an elemental shift was imminent. We had hope, and that hope led to innovation, and innovation led to transformation, an accelerated digital transformation. And as we began to gain momentum and move above and beyond, giving our communities solace and security of a no-touch economy, support, and sustainability, a promise of a bright new future, a sudden halt that accelerated innovation and has transformed our tomorrow. A brighter tomorrow.
No, it's not a dream. It's a reality. The pandemic has affected every part of our lives and behaviors. Digitization is needed now more than ever. Across the world, we have witnessed people embracing technology, from family Zoom quiz to virtual board meetings. Social distancing and lockdown restrictions have encouraged people to go online more and stay connected. And this has created a surge in the use of digital channels, from digital banking services to e-commerce, digital payments, e-learning, and virtual healthcare, to name a few. As we all know, the dramatic digital transformation of the financial services was previously slowed down by regulations and old systems. However, the arrival of COVID-19 crisis has turbocharged the digitization of financial services across the world. As we move from response to recovery, banks and financial institutions must build on this and reassess their priorities. We must embrace and deliver digital innovation to meet customer expectations and stay competitive. The path to recovery will be digital, and the path beyond recovery will move from digital to invisible. While FinTech have moved from disruption to maturity, acquiring millions of customers from traditional banks, banks have been forced to update their digital offerings to compete. My vision of the future bank will be based on efficiency, innovation, revenue-driven, and enabled by more digital, data and AI-driven, cloud-based, disruptive platform, and finally, agility. The bank of the future has to be one that reflects customer pain points their ambitions and dreams. Here at Bank ABC, we call this banking that reflects you. This means that the retail banks will not only compete with other banks, but they will compete with the entire Open API ecosystem. In my opinion, it will not be enough to offer attractive interest rates and traditional banking products. Banks must now provide customers with access to non-banking ecosystem, from insurance to travel, medical, etc. Less than 2 years, the new standard of open banking emerged, and we have seen it being embraced by regulators, especially here in Bahrain, with more banks becoming open banking compliant. However, the financial services industry is already looking beyond open banking to the next phase of innovation known as OpenX, which is more connected ecosystem to enable invisible banking.
The future retail bank needs to be more insightful and contextual in providing advice to customers through personal finance assistant like Fatma, rather than being transactional. The use of data analytics and AI in the post-apps era will be transforming what banks can offer to customers to ensure an effortless money management on a daily basis. What if banking, or let's call it smart life and financial coaching services, becomes something like this? It predicts your important life events from your historical transactions and reminds you in voice or text to execute them in one word. It knows your financial and personal goals on the long term and your behavior, and guides you in every buying or even other decisions. At any time, the bank will provide you a summary of your financial health through augmented reality and agree with you on some recommendations to improve it.
Glad I was able to help you with your financial matters for the past 3 years and that you're enjoying your retirement with a good income.
The future retail bank goal is to make you a successful and happy person. It won't just be a bank, but your trusted and instant smart advisor and more, much more.
The next generation of banking will be invisible banking. Retail banking customer preferences are rapidly evolving, and the pandemic has created a surge in the use of digital channels, with trillions of transactions taking place online over the last few months. Retail customers are well informed and have high expectations and no longer rely on traditional relationships to access services. They won't hesitate to switch banking services in the same way they select utility providers, insurance company, and retailers. I know for sure facelifts do not work. Traditional banks that don't embrace digital and simply adopt a superficial approach face the threat of losing customers to challenger banks and big techs, which offer personalized, responsive, digital, mobile-only services. Ladies and gentlemen, the train has left the station and racing ahead. Innovation and fintech continue to disrupt corporate banking across 3 dimensions. The innovation of products will be mainly led by open banking directives, leading to more product innovation, such as supply chain financing, sustainable products, and next generation of digital payments. The delivery of such innovative products will be through joint venture and consortiums, and also through AI, data analytics, smart digital channels, which will replace off-the-shelf products. Corporate banks will leverage the new technology ecosystem by focusing on B2B and API adoption. Finally, innovation will become the core of the corporate banking in the future.
The future corporate bank will be embedded in the processes and operations of the firms it will be serving and moving away from traditional products. Corporate banking services such as payments, liquidity management, and financing will be utilized by clients as true plug-and-play APIs to construct the workflows that corporates need as embedded components of their business and not as separate banking tasks. The future corporate bank will process complex transactions instantly through blockchain networks and smart contracts, which will also facilitate domestic and international trade. Corporate banks of the future will support multiple digital asset types, such as digital currencies, to boost efficiencies. Digital assistants of corporate banks of the future will be providing key value adds to corporate clients and will be serving such client bots and not only employees or systems. Such assistants will be powered by learning algorithms to help in matters such as the optimal use of working capital and finding the best suppliers through effortless experiences to corporates. Generating unique business insights will be a key offering of future corporate financial services to clients by fusing the industry, economy, and client data. The corporate financial services providers that will thrive in the future will be data-driven advisors to companies on business strategies and growth as partners beyond transactional and financial services.
Glad I was able to help your company grow by 40% during the past 2 years.
The future model of corporate banking has to show flexibility by co-inventing with customer and the use of data analytics to personalize and customize. It also has to show simplicity through seamless customer experience and faster onboarding. It also has to connect by integrating with the client platforms and provide cross-product connectivity. Here at Bank EBC, we are so fortunate to be in the middle of our wholesale banking digital transformation program, building the bank of the future. Challenger banks continue to directly challenge the status quo of traditional banks by offering personalized products through enhanced customer experience, faster onboarding, and easy access to mobile banking services, all at a lower operating cost. While COVID-19 has accelerated the demand for digital wallets and mobile money, challenger banks are now facing competition from big tech and mobile providers. And now that challenger banks have established themselves, what is next? They should focus on increasing customer adoption, enhancing their products and services, leveraging AI to provide personal finance assistance, establishing their banks as a platform, and keep innovating as guided by what I call structured agility. As we all know, the payment industry is no stranger to disruption. And now, the surge in digital, industry dynamics, regulatory initiatives, and shift in customer behavior will lead to a new landscape for the future of payments. The COVID-19 aftershock is expected to push down the global non-cash transaction volume due to a lack of customer spending. However, following the pandemic, and according to a recent survey by Capgemini, the volume of non-cash transaction is predicted to reach $1.1 trillion by 2023. This growth will be mainly in the MENA and Asia Pacific regions. And this growth will be driven by e-commerce, accelerated adoption of alternative payment methods, and the payments industry will continue to evolve further to deliver more and more invisible payments and greater engagement with B2B customers through technology. What about regulation? There has been a major shift in the role of regulator in relation to payments as a result of the pandemic. They have acted quickly to protect customers and merchants. But we require a universal measures to be taken, which protect the entire ecosystem, especially the enablers. We have also seen increase in digital banking licenses issued, as well as the introduction of central bank digital currencies across the Far East. Here in the MENA region, we require more clarity and standardized approach to these. The pandemic has proven that the future of banking and financial services is collaborative. We are fortunate here in this region, where regulators have worked closely with banks and financial institutions. Looking ahead, we need to see more collaboration across the entire ecosystem. The future remains a place of unlimited possibilities. Looking ahead, the future of digital banking is likely to evolve faster than we have seen before. Adapting to this new digital world is not an option, but in fact about survival. In order to survive future challenges, financial institutions will have to change how they operate, invest heavily in AI and data science and cybersecurity, embrace blockchain and open API, push ahead with the adoption of public cloud, and optimize their digital skills. Ladies and gentlemen, over the next 2 days, let us take a closer look at the no-touch economy and how the future banks can maximize their returns in an open ecosystem environment.